Welcome to In the Hot Seat with the Tenney Group. I'm Spencer Tenney. It's good to be with you. Today we've got JT Engstrom from Metafora. So excited about this conversation today. JT, welcome.
Thank you, Spencer. It's good to see you, and thank you for having me on.
You bet, sir. So before we heat things up a little bit, just take 30 seconds. Tell us about your role at Metafora and what you're currently working on.
So I'm JT Engstrom, full-time at Metafora. I run corporate development and strategy. I focus on partnerships, commercial relations, product development, and some more of our services and advisory offerings to the market, all focused on transportation and logistics.
And you've had a long career that has intersected transportation, some M&A, investment banking, all kinds of things that I think will affect and kind of steer our conversation today. So let's jump right in. Metafora, for those, we got a new brand name here, formerly CarrierDirect. Can you give us just for context, because I think this will help us provide a better backdrop for the rest of the conversation, just kind of the key focus of the business. What is Metafora doing and how are they serving the transportation industry?
Yeah, that's a great question. It is true that we did rebrand a Metafora about 2 months ago, actually the day I came on.
Was that related, JT?
They've been working on the rebranding for a period of time. The team, the executive team at Metafora has. And the rebranding is a reflection of the evolution and growth of the business over the past couple of years. CarrierDirect did a phenomenal job developing custom services and software for transportation companies and also providing advisory services. Those two pillars of which we still do. In addition to that now, we develop products, SaaS products for the marketplace, which is something I work on a lot and is provided and offered into the market.
Just before we get a general overview of what is your take, where are we at in transportation logistics right now? Because there's been all kinds of M&A. We've had all kinds of disruptions, be it in terms of driver pay, recruitment, increasing costs. We've got inflation. What's going on? What are we looking at here right now?
Yeah, that's a phenomenal question. Transportation is the backbone of the economy, right? And so our economy, if you talk about the U.S. domestic economy, which is one of the most diverse and dynamic in the world, transportation as a result has to be diverse and dynamic. And so our industry is continuously evolving. And obviously, on top of that, our domestic transportation industry is tied to the global economy as much, if not more, than any other transportation industry in the world because of the position the United States consumption and industrial production has globally. And so not only is it diverse and dynamic domestically, but it's also continuously responding to international trends. And we're 2 years into a pandemic, and a few weeks, maybe you would call it, into a global conflict or a regional conflict that's having global implications, probably more accurately. And so we're seeing transportation companies, in light of that, reacting as quickly as they can to those market dynamics. That is on the back or riding the secular trend of already having invested a lot in technology, and there are some winners and losers there in terms of being measured by sort of return on capital or expansion of capability. And in parallel with that, there's been a lot of merger and acquisition activity across both the asset heavy and the asset light space, which has provided a pretty unique kaleidoscope of ways to play the market. And in just the last 2 to 3 years, we've seen a portfolio of really unique transactions occur. Some to expand into new verticals, some to acquire technology, some as acqui-hires, some as acquisition of density or scale. And so I think this is one of the most or more unique periods of time in transportation, and it's really fun to be a part of.
Well, ditto to that. And just to kind of unpack that a little bit, I think that you kind of teased it, but I don't think we've ever seen a time where there's been more intrigue about transportation and logistics than we have right now. And a lot of that has to do with tech innovation, which is off the charts right now. So maybe what are some of the examples that you've seen in the marketplace that have kind of surfaced in the last couple of years that have really got your attention?
Transportation historically has always been a late adopter of technology. And there's been really significant runs in true core technological development, some portion of which coming out of Silicon Valley by some of the better name brands, or better known name brands, Apple, Google, and so on and so forth. We're in a period now where the transportation industry is applying, I consider it applying a lot of those technologies to our industry, and there's a lot of different ways to think about that. And in connection with that, legacy platforms with either strong cash flows or large balance sheets, or both of which, or strong capital partners, have been allocating an increasing amount of CapEx to invest in technology to accomplish a variety of different things in the transportation space, either targeted at revenue growth, margin enhancement, new market penetration, so on and so forth, enhanced customer value proposition. And in parallel, venture capital firms have been deploying an ever-increasing amount of capital into the space to help seed new company growth, existing company hyper-dynamic growth. And every year for the past 5 to 10 years has set a new record for the amount of capital allocated through venture capital. And sort of the last big pillar is in sort of the private equity space. We found that private equity firms have been involved, or sponsors more broadly speaking, have been involved in a much more significant way than they had been in the past. And some what would be considered legacy technology platforms have found themselves bringing on fresh capital, executing on new ideas, designing new products for the market, and really helping participate in the evolution of the space. And so, I think if the next 5 years is anything like the last 5, you'll see some really unique evolutions. And in reality, I think the next 5 years will be more dynamic than the last 5.
I think that's extremely exciting. But it also, if that's true, then a lot of companies, in terms of their whole approach to the market, that they're going to have to evolve a little bit, specifically as it comes to technology and the way that they embrace it and leverage it. So what are some of the things or some of the questions, the most common questions that are coming to Metafora as it relates to what's the best way to integrate technology into my future growth strategy?
For freight companies, those who move, actually are physically moving freight, whether they own the assets or not, I like to think about having a tech appropriate strategy whereby they're deliberately making buy or build decisions. They have a technology roadmap which is well thought out. It is tied to financial performance. It can be measured against targeted financial performance so it can accelerate return on invested capital versus dilute it, and can increase the customer value proposition, which can be accomplished or measured in a lot of different ways. And you've seen a lot of what would be now considered legacy companies, or pretty relatively mature is maybe not the right word because that implies decelerating growth or stagnating growth, but well-known companies doing a pretty good job at that, or if not doing a really good job at that, and deploying pretty serious amounts of capital. And so we get asked a lot about what should I be thinking about, how should I think about my roadmap, what technology should I be integrating with, how do I think about my TMS system, how do I think about integrations in terms of actually integrating EDI, API, who should manage it, should I do it in-house, should I third party it, and piggybacking on that last statement, a real significant amount of domestic surface transportation is still flowing through TMSs that are third party built and housed. And so then how do you play with these large TMSs, and how do you mine the data? How do you streamline information feeds via API? How do you update throughout their different versions? Do you want to do on-prem, off-prem, cloud-based? There's a lot of different conversations and ways to think about that. but tying to my first comment, most importantly for freight transportation companies, again, whether or not they own the assets, it's really important to have the product roadmap or the tech stack, or basically the product roadmap and the tech stack, designed to increase customer value proposition to drive a heightened level of return on invested capital.
I think that's really interesting, and thank you for that list. I hope that all of our audience are just bullet pointing all those questions out and just keeping them in their strategy, in their file. I think those are all excellent questions. Now you mentioned buyer build scenarios. How have the attitudes with that towards that question evolved over the last 24 months?
Yeah, it's a great question. I mean, there are companies that have done a really good job of demanding premium valuations by being tech forward, or marketing and branding themselves as tech forward, or deploying a lot of capital into technology that is perhaps underknown and overvalued. And the last 24 months has been very unique in the sense that I think investors have become more savvy around what is true tech and what does it mean, what are the implications, and how does it provide enhanced scalability and better financial performance, partially because you can see it in the historicals of those investments if they are bearing true fruit. And there's a larger sample size of companies being very tech forward or investing in technology to be able to have comparisons. And in addition to that, there is a heightened level of now at scale platforms in the pure technology space that can really help test out the buyer build economics to stress test whether or not certain technology should be built in-house or purchased from a vendor.
Now, I think that's a wonderful insight, and I mean, I think it's valuable to the people listening, that just to understand that there are options to stress test before you make major capital investments towards technology that may or may not influence the way that an investor values your business. And I think that's so important right now because there's extreme pressure to go big on technology right now.
Yeah, we've also seen some really savvy incumbents think about their tech strategy and capital allocation strategy associated with technology, not just in terms of buy or build, but perhaps also investing in front-running partners, whereby instead of building a technology, maybe you can take equity and give some cash to an earlier stage business to build the technology in conjunction with the market, cross-sell it to the market, and reduce your overall cost for something that is perhaps really critical but not core strategic that you don't want anybody else to have. And that's another avenue that we've seen be taken by companies in an increasing clip.
So let me transition a little bit to where our worlds regularly intersect, and that's in the M&A space, and specifically in diligence. And I think that, to your point about investors becoming more savvy, and I think this is where we see this coming up, is where you have savvy investors that have expectations to scale, hyper growth. That's how they're delivering return to funds and their investors at their private equity groups. And so there's very specific sensitivities around the value and proprietary aspects of this technology. So what's happening? What are you seeing in terms of diligence, the way that it's evolving in the specific tech area, and then maybe shed some light into the role that Metafora is playing in that whole question?
Yeah, I mean, the technology investment cycle is very different than that of buying rolling stock assets. If I see an asset-based carrier deploy a certain amount of capital in the rolling stock, you can measure in a relatively short period of time, your revenue per tractor per week, or your, miles per tractor per week, things of this sort. You can see really quickly the financial implications. In technology, many times you're investing up front for a scalable revenue machine that's addressing a specific total addressable market, and the initial upfront investment may have proof of concept or what we call product market fit, but there's then a discussion around what is the scalability and what's the operating leverage associated with that, and and thinking really diligently around what are the true incremental and fixed versus variable economics, in addition to how differentiated is that in the marketplace, is really core and critical for understanding, on a pure financial level, what are you buying into.
So trends in technology. You kind of have talked about the present state right now. What do you see happening around the way that both on the asset heavy, the asset light side, how are we going to evolve in the way that we embrace technology in the coming years?
Yeah, I mean, we live in a world where there are TMSs being built and priced purely off of variable costing or transactional load count, which is new and unique, that are exclusively cloud based. That's a stark evolution from where we were 10 years ago. We also live in a world where there's companies that are now multi-billion-dollar enterprises that 10 years ago didn't exist, that are category creators and are offering products and services to the marketplace that also did not exist 10 years ago. That's unique. We're also in a world now where maybe 5 years ago, companies would be very, perhaps you could say, defensive over their data, recognizing that data is a core asset that, I would argue at some point in the future could be actually valued on a balance sheet somehow. To where present day, a lot of companies are recognizing that sometimes utilizing that data as a strategic asset and having the appropriate agreements and protections around it can be as powerful as hoarding it themselves, because in totality the market's data is much more valuable than any single operating company's data, and that can actually benefit the overall system, the overall industry, to have market level economics and lane by lane information for a variety of reasons. And so these are just some specific examples, but all of these trends in total are pretty phenomenal and really unique. And I think as we look forward over the next 10 years, what you'll see serviced or offered to the industry place will be materially different than what we have now. I mean, some of the logos will still exist, but there will also be a lot of new logos, new offerings, and new products and services that perhaps weren't possible previously. And, fortunately, for these to be successful, they're going to have to be built in conjunction with the industry, right? And so sort of the most valuable sort of bubble to the top, if you will, or the most beneficial to the industry space, bubble to the top with the appropriate level of execution. And so we think that as a result of that, you'll see CIO roles and CTO roles at transportation companies having a heightened level of importance as that becomes much more of a strategic enabler. Similarly to, perhaps you could say, the transportation manager or the head of supply chain at shippers 5 or 10 years ago also had a similar dynamic occur, whereby for a lot of large shippers, your transportation manager might have been viewed as a cost center up until shippers didn't have a lot of capacity and they realized getting product to market was also a revenue implication as well. And so I think that dynamic will be really unique, and certainly as those chairs have a lot more capital allocated behind them, that will create some unique opportunities in the space as well. And you're seeing a lot of this occur already, but I think you'll continue to see that trend ripple through the industry, and that'll be a lot of fun to watch evolve.
Well, you paint an exciting picture, sir. That is for sure. So, last question. Prior to going live, we started an interesting conversation about your career, which has had one common thread, which you've always kind of had transportation, while it's sometimes in technology, sometimes in investment banking. So I'm curious, this being a much more fascinating period in transportation than maybe 20, 25 years ago. Um, what what would be the sales pitch for the outcome, for the top of the class leaving college right now to begin a career in transportation and logistics? What would you say to him in terms of to try to convince that talent to come to our space and make an impact?
I mean, transportation is 5 to 10% of GDP. It's relatively stable in terms of market demand, but it's also highly interesting, rewarding, and fruitful for those who are ambitious. So you can have a good combination of stability with ambition, which is not always the case in a lot of industries. There are tons of technical opportunities and data opportunities. There are a lot of deals that get done of all sorts, all shapes, all sizes. And there's a lot of capital that's being allocated all across the investment spectrum, which make things really fun to think about how to grow and buy and build and do all these other kinds of things. And so, I personally love working in transportation, and I think there's a good marketplace for a lot of college graduates to have a similar experience.
Listen, JT, I love the conversations that we have. Grateful for the time that you spent with us, sharing your insights with our audience. So interesting. That's going to do it for us in the hot seat today. We'll see you next time.